Good evening, traders, and welcome to another After Hours with Bereez. Let us see what market has done today. One clear setup in the index that we can see here, in fact, daily time frame is better, is this is where sort of the previous, not exactly a swing low, but a low of a consolidation zone that happened for about 7 trading sessions. And today it looks like Nifty has once again tested that low, and on a smaller time frame, in fact, you can see that it's a double bottom pattern. Similar pattern did happen yesterday also. After a fall, there was a rally. Today also there was quite a bit of fall. This 19,300 level, it did look like it might break at one point because of the sort of bearish sentiment that was there in the market. But market did in fact hold this level. We have closed at around 19,400. Whether this is and this is not a breakout retest like 18,900 sort of level that I have marked here. So I'm still a little hesitant. This is not much of a pullback either. I mean, from high to low, it's about 3.5%. So this is not much of a pullback to buy into for me. I mean, for trend followers, yes, this is a good enough pullback. If we quickly jump into Fibonacci, then yes, this is also half of the rally here. I know 50% isn't a Fibonacci level, but yeah, it is traded by quite a lot of people. So this is one level on index. Another index, Banknifty. Here I can say that we have actually tested the previous breakout. I mean, yeah, it's not a very sharp breakout here. I mean, here also it looked like we broke out, we sustained above the level for a couple of days, then again we broke down. Again after 4 days we had a false breakout, again we came down, and then the breakout actually worked. There has already been one pullback to this level, that is 44,500 ish. Today it looks like there was another pullback to the lower level, that is 44,151. I know there is still about 150 points gap here, but that gap might just be filled tomorrow if we see a down move followed by a drastic up move. So yeah, Banknifty also I don't think there is, yeah, so Banknifty has fallen more from the top than Nifty, so that's something to look at. But yeah, this breakout retest setup that we keep talking about does work quite well in index, because indices in general have a tendency to go up as against individual stocks. So breakout retracement is something we check in indexes as well. And speaking of the same setup, here is ICICI Bank, and I mean textbook setup here. Testing of resistance, breakout, and then testing the previous resistance as it is now a support. It is at 950, 960. I mean, this, you can mark this as a zone. I have marked this as a line. But yeah, this is ICICI Bank has properly retested its previous this level. So ICICI Bank is a possible long candidate here. Mind you, the option prices these days are not very favorable for very short term traders, because in this entire fall, the call options in fact gained rather than that is FAR OTM I'm talking about. For FAR OTM, call options gained as compared to FAR OTM put options. So I was at one point holding 250 put, which did not spike at all throughout this entire down move, whereas the, I think, 19,800 call that I had did in fact spike by 50%. A 1.5 rupee call spiking by 50% is not that big a dent, but I feel like everybody, since they are trading very close to the market, so couple of strike prices above and below where market is, the hedges have become really expensive. I mean, you have to go about 10-15 strike prices away to get a decent hedge on your CTM position. Otherwise you end up paying too much for the hedges, and which is why all the hedges are quite expensive. So being an option seller and a risk averse at that, I feel selling all these hedges and collecting small premium, I mean making only 1.15-0.2% of the capital also works in this kind of market, because I mean a CTM option, from what I have seen, calls I think quadrupled here, then puts doubled in this move, and then there was sort of a cool off of 5 year a little bit. But yeah, in the first how much period is this, first half an hour, 45 minutes, at most 1 hour, you would be so exhausted by the adjustments, and you would have paid so much in delta costs that you wouldn't just have enough risk appetite left for the rest of the day. So I feel staying far OTM and then weighing in as and when the opportunity strikes. So for example, this 300 retest was a good time to pull the puts up, because if this had broken, there was a very short stop loss to be taken in and things like that. So there is some tweak in option strategies required, especially for sellers. Now that a number of expiries are also increasing, it's better to keep the endurance for the entire week, for 5 days, rather than just being burnt out on every single expiry and not having 100% of your mind at what you're doing. So that's just my 2 cents. Thanks for watching.